Good morning, everyone. Welcome to the start of a new week and a new month. Today is Tuesday, the 4th of May, and I welcome you all to the Vetiva breakfast meeting. This meeting is brought to you by Vetiva Capital Management in partnership with Frontier Africa Reports. And today we'll be hearing a rundown of the equity and fixed income markets, as well as some insights on the wider African market from our partners at Frontier Africa. Before that, I'll be going over the Zenith and FBNH Q1 results, and our industrial goods analyst, Onyeka Ejoma, will be going over the Dangote Cement Q1 performance. Before we hear from our speakers, I'd like to remind everyone that this meeting is being recorded and may be shared with third parties, and is also being broadcast live on Facebook. The presentation is scheduled to hold for 30 minutes, inclusive of Q&A. However, if due to time constraints, we're unable to take all of your questions, kindly forward them to research@vetiva.com and we'll get back to you. While the presentation is going on, we'll be putting up a short questionnaire that we would like all participants to answer, and then we'll share the results at the end of all the presentations. So to start with, we'll go over a rundown of the equity market from last week. Good morning, Sean.
Good morning, Joshua, and good morning, everyone. Welcome to a new week. We start off with the performance of the BRVM market. The BRVM Composite Index, which closed positive in the last trading session. The 27 basis point green upward close was largely influenced by gains in Unilever Cote d'Ivoire, Palm Cote d'Ivoire, and Nestle Cote d'Ivoire, all closing north by over 7%. We saw 16 gainers and 13 losers in an activity-packed session as turnover improved over 225%. We expect positive sentiment to continue in the market going into the week. For Ghana, the composite index also ended the day in the green with a significant 5.08% appreciation of the benchmark index. MTN Ghana was largely responsible for this upside as the counter closed the session up 9.62% with no loser in the session. GCB Bank was another gainer on the day with 5.56% price appreciation. MTN Ghana dominated the busy session with activity level improving by about 486%, which is quite significant. We expect this trend to be sustained in subsequent session of the week, with MTN headlining activities in the market. I think we will continue to see foreign investors and even our local investors continue to move funds into that particular counter, MTN in Ghana. The year-to-date return of the market is now 31.93%. In Nigeria, the market ended the previous session higher with 95 basis point appreciation to moderate the year-to-date return to now to just negative 1.08%. The week-on-week return was also positive with 1.37% gain. The appreciation was largely driven by 715 basis point gain in one of the cement giants, Boa Cement, 139 basis point gain in Axis Bank, and gains in GT Bank and Zenith, as well as some small cap stocks, all led the index to a positive close in the last session. Loss in the most capitalized stock, which is Dangote Cement, was however not sufficient to pull the market on the day. The month of April, which just ended, also closed in the green with 204 basis point gain for a first positive monthly close since January, just like we had expected. That on the back of those Q1 earnings release, we should see some decent appreciation in the market, which was what played out. Though those results came out to be largely mixed, while we're seeing some decent and improvement in top line and bottom line. Others were largely still affected by the coronavirus, and so they couldn't make it as much. Value and volume traded improved in the session anyway by about 21% and 53%, while market breadth stayed negative with 23 gainers and 25 losers. Just a few concerning results. I'll just take a few. A few results were released on Friday with Adova, Presco, and MTN, amongst others, releasing impressive results with improvement, while the likes of Torre, Aiko, Custodian Investments, they all recorded revenue decline. Specifically for MTN, the company recorded 17% increase in top line and 42% increase in bottom line year on year. That's quite significant. Also, Presco recorded over 100% gain in bottom line. I think the two Greek names have been, their Q1 results have been quite impressive. Looking at for year on year comparison. So moving into today, we expect a mild start to the week while investors continue to react to Q1 numbers that were released last week. Access and UBA with decent results should continue to get positive patronage, while we expect the likes of MTN, Como, and Dansem, who are leaders in their sector with positive numbers, to also see some demand. Medium to long-term investors are encouraged to cherry pick fundamentally sound names into their portfolio. I think that's what we should expect from investors this week. So that'll be it for equities market. Do have a profitable week ahead. Thank you.
Thank you very much, Joe. Before we continue, I'd like to make a quick adjustment. On the poll, we included the JSE, although it's not a West African stock exchange. So when you're answering the poll, if you could please ignore the JSE and pick any of the other West African stock exchanges. Either way, okay. So next up, I will just be going over the First Bank and Zenith Bank results very quickly. I'll start with Zenith Bank. So Zenith Bank announced gross earnings of about 157 billion, which is a 6% year-on-year decline. And this decline was mainly as a result of, as we have seen previously, a 12% decline in interest income to about 101 billion. Now, this decline in interest income was once again due to a pretty significant fall in investment securities, specifically T-bills interest income. On the other hand, interest expense was down 45% to 18 billion, which meant that net interest income actually improved 2% year on year to about 83 billion. In terms of non-interest income, the bank saw fees and commissions go up by about 71% year on year to 36 billion. And this resulted in a gain of 7% year on year to 6 billion. Operating expenses was up by about 4%. This was mainly attributable to a 3.5 billion increase in AMCON charges, as well as some other minor increases in operating expenses. But overall, the bank was able to keep other charges pretty much in line year on year. Also, on a positive note, provisions for loans and other accounts was down 2% year on year to about 3.8 billion. And this gives them a profit before tax of 51 billion, which is a 4% year on year improvement, and a PAT of 53 billion, which is a 5% improvement on Q1 of 2020. Overall, this pattern that we've seen with regards to all the other banks has meant that interest income has been the main driver of any decline seen in gross earnings, but due to the fact that the Zenith Bank was able to keep provisions pretty much flat year on year, they were able to report a positive growth in profit. Next up, we take First Bank. Now, First Bank reported a 14% year-on-year decline in gross earnings to about 136.6 billion. This was again due to a 25% decline in interest income, again driven by declines in investment securities interest income. Interest expense was down 43% year-on-year, but this did not stop the bank from recording a 12% decline in net interest income to 52.8 billion. Fees and commissions was also up by about 32%, and then overall the non-interest income was up by about 6% year-on-year. Operating expenses was once again tame. We saw only a 3% growth year-on-year to about 78.9 billion, again on the back of some increases in AMCON charges. The bank did report a 36% year-on-year growth in provisions to about 13.2 billion, which resulted in a 34% decline in profit before tax to 18.9 billion. And profit after tax came in at 15.6 billion, which is 32% lower than Q1 of last year. That will be all for FBN and Zenith. I will quickly move on to Omori again to give us a rundown of the fixed income market. Good morning, Omori again.
Good morning, Chidozie. Good morning, everybody. I'll quickly start with the money market. The money market opened about 475.54 billion positive on Friday. After adjusting for repos, the market was about 228.49 billion long. The money market finally opened positive after consecutive days of opening in negative. This was made possible by the FS retail refund that came in on Friday. Despite the significant improvement in system liquidity, money market rates tightened to trade between 30 to 40% level on the back of increased funding pressure, as bank had to fund for the retail FS auction that happened on Friday. So our expectation for today is that the money market will trade at lower levels in the absence of increased funding pressure. Moving on to the FS market, the parallel market remained stable on Friday to trade at 485 naira to $1. The earning window traded at the high of 429.13 naira to $1, closing at 410 naira to $1. That's a 1 naira appreciation from where it closed on Thursday, which was 411 naira to $1. So we saw a significant decline in industry turnover on Friday, as it closed at $56.81 million, coming from the $110.46 million that was recorded on Thursday. We believe the Naira will continue to hover around these levels in the interim, in the absence of any significant inflow of FS into the system. Moving on to the Treasury Bills market, the T-Bills market traded on a very quiet note on Friday, as dealers tried to clean their books for the month end. There was some interest on the long-dated NTBs, particularly the newly issued one-year paper. The increased demand for the one-year paper caused the market to trade at a slightly bullish note, as offers on that paper moderated to below 9% levels to settle around 8.8% levels. We also saw demand on the special NTBs. It was best offered in the market on Friday at 6.3 levels. However, bids on that end was around 7% levels. Overall, a few trades were consummated across the benchmark curve. Our expectation for today is that the T-Bills market will resume this new month with increased activity. I'll quickly conclude with the bonds market. The bonds market concluded the week on a very bearish note on the back of reduced demand for bonds, as players prefer to buy T-Bills at current levels. The improvement in rates across the benchmark curve spurred increased activity in the market, as players selectively cherry-picked bond offers across the long end at above 14.2% levels. Other maturities that were mostly actively traded on Friday were the 2035, 2045, 2049s, and the 2050s. Our expectation for today is that the bonds market will continue to trade on the bearish note on the back of the tight system liquidity, as this will continue to spoil sell-off across the benchmark curve in the bonds market. That will conclude the presentation for fixed income. Thank you very much.
Thank you, Omarige. Quickly, we'll move to Onyeka Ijoma, industrial goods analyst, for a quick rundown of Dangote Cement's Q1 performance. Good morning, Onyeka.
Good morning, Joshua. Thank you very much for having me. I'm going to quickly run through the Q1 results for Dangote Cement. Dangote released their results on Friday, reporting a very impressive result. Top line was up by about 34% year on year, and it was much higher than our expectation by about 10% year on year. At the start of the year, we had talked about how we expected cement demand to continue to come in very impressive, largely driven by the FG's focus on transport infrastructure, as well as some key funding still going into healthcare infrastructure. And we are clearly seeing, that play out in the market. Cement volumes came in at about 22% higher year on year in Nigeria, 30% higher year on year in across the other African markets, and this was largely due to less disruptions, growth in transport infrastructure, as well as other factors. Pricing was also up about between 8 to 10% across the different markets, largely due to outright pricing, as well as a reduction in discounts, in cash and trade discounts. All this led to significantly stronger revenues. The higher volumes, the higher scale led to increased efficiencies. And we also saw that production resumed in the Boko cement facility, where the company started to recover some of the fixed costs that they were expending on the plant. And the new Obajana Line 5 started production in the quarter, and we saw improved efficiency from the newer and more efficient plants. All this led to stronger EBITDA margins of about 800 basis points year on year, about 500 basis points ahead of our expectations. But largely, the strongest gain came from the Nigerian business, where EBITDA margin hit 66%. This is a throwback to the competitive space in the Nigerian cement market over the past 2 years. We're basically seeing them hit the same kind of margins that they were hitting a couple of years ago before BUA came into the market. And beyond that, EBIT was up 66% year on year. PBT was up 49% year on year, and PAT came in at 49.3% year on year. Largely driven by a much higher tax expense year on year. It was a very impressive result from Dangote Cement. We expect the focus on infrastructure to continue to drive relatively strong volumes for the rest of the year, and we see this continuing to support their performance in 2021. The Dangote Cement will be having a call this afternoon at 3 p.m. with their investors to talk about the results. If you're interested in joining the call, you can reach out to the research team or to the sales team. Thank you.
Thank you very much, Onyeka. Now we'll be hearing from Sheikh Mbu, our partner from the BRVM. Good morning, Sheikh.
Hello, good morning. In terms of updates in this 17th week of the BRVM, investors have propelled the market at its highest level on the last 13 months. All the recovery that was so expected of the BRVM is more and more perceivable in line with the great performances, the weekly performances of the BRVM composite, as mentioned earlier, which has reached 1.46% in this fifth consecutive weekly performance. Investors were quite active in line with the affluence of the issuance of the annual reports that were issued, which helped the market get back to levels higher than the levels pre-COVID-19. In terms of publications, it is important to note that several companies issued their annual reports and their first quarter report, such as Bernape Ivory Coast, Setao Ivory Coast, BC Ivory Coast, Coris Bank, Sita, Bolloré Africa Logistics. In terms of the individual performance, the market was clearly dominated by the performance of Nestlé Ivory Coast, whose share jumped by 41.67%, reaching its highest level since April 2019. Due to this trend, since the beginning of the year, the company registered today a performance in excess of 218% and positioned itself as one of the best performer in the market in the among the four first stock price in 2021. In terms of the winner, there were also Setao Ivory Coast, which showed also an excellent jump of over 39.29% in its share price, mainly due to the good results that were issued recently. It is important to note that the company displayed a 168% in its net results, and its shareholders are expecting net dividend in the coming days. In the top five, also you can still perceive Crown CM 37.5% increase in the share price, Nouvelle Edition Ivoirienne 35.29%, and Filtersac 17.57%. In terms of market losers this past week, BEOA Burkina Faso displayed a setback of 3.85%, and SMB, with its great performance over the last few weeks, has experienced a 3.66% decrease in its share price. In terms of the bond market, the market closed with a minor setback compared to the previous week of minus 0.17%. The weekly value was traded at 5.77 billion CFA, marked by transaction carried out on the bond loan of the public treasury of Burkina Faso for an amount in excess of 4 billion, and the public treasury of Ivory Coast for 1.52 billion. In terms of the treasury market, issuers such as Ivory Coast, Burkina Faso, and Togo intervene on the money market and debt raise amount 140 billion. Investors offered 348 billion for the request compared to the requested amount, but only 154 billion was withheld, showing an absorption rate of 44.16%. In the coming week, it is expected for Guinea-Bissau, Mali, and Niger for an amount in excess of 115 trillion CFA to be issued in the markets. That's it for me.
Thank you very much, Sheikh. Before we hear from our partners at Frontier Africa, I'd like to quickly inform everyone that we've relaunched the poll. So if you could please vote in the poll, and we'll take the results at the end of the meeting. Next, we'll hear from Temple Achaju, our partner at Frontier Africa. Good morning, Temple.
Good morning, and thank you for having us this morning. We'll start with the story of MTN Rwanda that is getting listed today on the Rwandan Stock Exchange. Over 1.35 billion ordinary shares will be listed today. We'll see how that goes and change the trading day for them over there. Inflation data for Kenya came out recently. It was for the month of April, which was marginally down by 5.8% from 5.9% and remains within the target of the central bank. We know that food inflation, lower food inflation, and the freeze on crude oil price, or rather fuel price hike, were the key drivers for that steady marginal decline rather. For Uganda, the currency there has actually been a little bit steady in recent times. We understand it's due to inflows from coffee exports and a couple of NGOs that are driving some remittances into that country to support the downtrodden in that country. Ghana, as a revenue authority, is looking to go digital from July the 1st, but as a prelude to that takeoff on July the 1st, they've seized the acceptances of personal and corporate checks, so that that's in terms of taxes and custom duties payments. So all that has to be done has to be done digitally. In the southern part of Africa, Sanlam, the heavyweight insurance giants in that country, has now bought some 22.8% stake in Saham Assurance Maroc. It's an understanding that the two countries, or the two entities rather, reached to help them mitigate the risks ahead for Saham Assurance Maroc. So basically, this deal is like increasing Sanlam Insurance stake from 61. Sanlam Insurance stake in this company, in Saham Assurance Company, from 61.7% to 84% plus. And we understand that it's valued at $137 million, but it is something that the regulators are yet to give final approvals to. We understand as well that Egypt and Libya are now having some kind of a discussion for investment opportunities, trying to explore their areas of competitive advantage to see how they can strike a deal. That is coming on the heels of President al-Sisi's endorsement of the $95 million OPEC fund for MSMEs in Egypt. This will be like the third phase of the MSMEs projects coming from that from the OPEC Fund for International Development. The first was in 2020, February 2020, that was last year, when they invested some $14 million in storage facilities in Egypt, and the previous one was in 2018. So this is like the third phase of that funding project in Egypt. Thank you for listening to our headlines for today. Thank you.
Thank you very much, Temple. We've now reached the Q&A session. Just a last reminder for anyone who hasn't voted on the poll yet before we close it, and then share the results. If you have any questions, you can, if you'd like to speak, you can raise your hand and you'll be allowed to speak. Or if you prefer, you can leave a question in the Q&A box or the chat box. Or if you are joining us from Facebook, you can leave a question in the comment section and we'll answer your question. It appears we have no questions, so I will now end the poll and share the results. It seems the most popular exchange is the South African exchange, with 41% of the responses. Next up is the BRVM with 24%, then the NSE 18%, and Ghana was also 18%. Thank you for participating in our poll. We will continue to update our polls and collate the results in order to bring you more interesting information as time goes on. With that,